I think Kast is a $1 trillion plus company, and I think it's going to be 100 billion if we miss and 10 billion if we miss really bad. Because the opportunity to build a global bank is so big. You have to be a little bit crazy to think this thing is just so enormous. So you need to have that ego.
You said I'm someone who absorbs things. Who are you?
Who am I?
Raags Pathy, also known as the stablecoin guy.
He founded Kast, a stablecoin-powered banking platform,
And leads JavCap as founder and CIO of its liquid crypto hedge fund.
I had to eat the humble pie. Can you explain me exactly what you mean by this?
Well, after my last business, we thought it was worth nearly 100 million, and then it went to zero. I had to go through this process of going and getting a corporate job. It's a big step down from thinking you're worth tens of millions of dollars. This is the hard thing as a founder that people don't talk about, is just that eating humble pie. You just got to get humble and realize that it doesn't matter how much you think you're actually worth. You're worth what you're worth.
Why do people call you the stablecoin guy?
They just went very deep on stablecoins and just learned everything about stablecoins possible. I think I know more about stablecoins than probably top 50 in the world.
Tell me something I might not know about stablecoins.
Roughly the world uses 70% in USD for trading. Maybe US dollars are like 25% to 30% of the actual world's currencies, but 99% of stablecoins.
You said before people will think I'm crazy, but Kast is a $1 trillion company, a global bank for 1 billion people. Can you explain Kast vision? Hi everyone, this is the little bit that I know none of you like that can help us make a huge difference for this show, and we want to take it next. 71% of the people who regularly watch When Shift Happens have not subscribed. And so all I'd ask you, if you want to make a huge difference, is the following. If you've seen this show before and you like it, help me, help my team, hit the subscribe button, and we'll continue to build this show for you. Thank you. I think you said something, I think you wrote something about the math of compounding as a founder.
Oh, 100%.
Do you want to tell us about that?
Well, I think it's just basically the simple fact of, we're not recording, right?
We are.
Huh?
We are, yeah.
Oh, really?
Yeah, we are.
Oh, I didn't know we started yet. Okay.
It's a living room conversation.
Okay. I mean, my theory around compound maths is that firstly, most people don't understand it. And if you do understand it, it's like the greatest weapon you can have. Because what most people don't understand is if your company is growing super fast and it's growing 15%, and you can make it grow 20% or 25% month on month, people just think, okay, that's like 15 versus 20. It's just 5% more. But it's actually not true. When you compound that over a year or 2 years, it's dramatic. Like it's multiples. Like the difference between 15% and like 35%, for example, is like 6x or more after 12 months. And so it makes a huge difference if you understand that every little thing you do that can add 0.5% here, 0.5% there, it just keeps accumulating, right? And so in a business, you've got maybe 10 different things you need to optimize for: fundraising, how operations are run, how marketing is run, who you're employing, how quickly a product is delivered. Is it delivered in 2 weeks? Is it delivered in 6 weeks? So every little thing, if you can squeeze 0.5% here, 0.5% there, it adds up to another 5% faster. You compound that in 12 months, it's the difference between you being the winning company and then someone else being the second best company. And so I don't think a lot of founders pay attention to this, and it makes me drive the business very, very hard. But I keep reminding everyone that compound maths is like super important, and every single bit you squeeze makes a huge difference.
How do you make people understand this at scale? Because you have 170 employees now.
Yeah. I mean, like I write to the employees as much as I can directly to give examples of things that I've read or things that I think about, you know. And so I think as a founder, writing to and talking to people at all levels of the company directly is super important, so that they can understand directly from you without any translation in between. But yeah, obviously different people don't get it. But I think the more you talk about things, the more people come to understand them.
How much of your time do you spend doing that? Because there's so many other things to do.
Yeah.
I'm actually terrible at it.
Yeah.
I'm terrible.
Yeah.
I'm like, I want people to understand what we're doing without me telling them.
Yeah.
Which is obviously terrible, right?
Yeah.
And wrong.
I don't have any like exact discipline to it. It's not like I say every Friday I'm going to write about it. Some weeks I'm writing more. Some weeks I'm busy and I write less. But I am a person who absorbs ideas, and if I see an idea, I try to write about it and tell people about it, not only in my own company, but also out in the world as well, So when I see that I observe something, I write it on X or LinkedIn for everyone to share, like that compound math.
Actually, on LinkedIn, I see you all the time. Bam, 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 all the time.
Yeah.
It's very good. Actually, LinkedIn much better as an algorithm for people to see all the time, and it stays there. So I see you much more on LinkedIn than on X.
Yeah. The problem is that I'm a long form writer. I'm not a short form writer. And so LinkedIn was more suited to me, and therefore I have a much bigger following on LinkedIn. But recently X changed its format so I could write long form, and now I actually post on X a lot more than LinkedIn. So yeah, it balances out over time.
You said I'm someone who absorbs things. Who are you?
Who am I? Well, I'm Sri Lankan Australian. I was born in Sri Lanka and I migrated to Australia when I was 5. So I'm also an immigrant. My parents were relatively wealthy in Sri Lanka and went to Australia, and we had nothing. And so I've felt that journey.
Why?
Because of the civil war in Sri Lanka, started in the early 80s, went for 26 years. And a few years after the Civil War, obviously, my dad wanted a better life, even if that was the sacrifice of leaving behind wealth we had in Sri Lanka to start afresh. And he never really made money again. And we always lived kind of at a very basic level.
Just to understand, why do you have to or leave your wealth behind? Is it because it's wealth in businesses that can be...
Exactly.
Okay.
Wealth in businesses and property. A lot of that property was caught up in the war. A lot of the businesses are not wealth that's transferable. And this, in many ways, seeing my dad, who was very successful and then had to live a very basic life as a shopkeeper, it's a very typical immigrant upbringing for a lot of people who migrate to the West as immigrants. They start a shop, and my dad had a shop for a couple of decades. I worked in the shop from when I was before 10 years old. So I grew up in that very typical immigrant household, like in a shop and living week to week, but in a very happy household, And that informs my worldview about money and how life is in many ways fair to us, because we escaped Sri Lanka and we went to a place like Australia, one of the best countries in the world, that allows me to have opportunities. And I had some parts of the family who were in Sri Lanka and they were suffering a lot more. And even though we weren't rich in Australia, we were rich in opportunity. And a lot of people in Sri Lanka are not, including parts of my family, right? And so that informs my worldview. I subsequently, as an adult, have traveled to 100 plus countries because I love exploring. I love being in lots of places. I've lived in 8 countries. And so this has given me a very wide worldview of both emerging markets as well as developed markets. But, at the core, I'm a person who I think is really an immigrant in many ways, and live that immigrant life. I'm also, I would say, an underdog. I think I've been discounted many times in my life. And, I haven't come from a traditional background, for success. And so I think that informs my worldview of like, I can appreciate people who come from nothing, but want to make something big. They want to go after bold ideas, And that's what I'm trying to do, I guess, with Kast, and that's what I try to do my whole life. And that's what we want to enable, I guess, with Kast as well.
You had the first shot with the startups, 2009, 2010?
Yep.
You built a cloud software company in Australia.
Yeah.
A business you told me was valued about $100 million, but that then left you broke for more than 8 years. And 5 of these 8 years were actually after the business closed down.
Yeah.
Can you tell me what happened?
Yeah, so myself and my business partner at the time, Simon, we started a cloud software company. It was a fantastic company that grew very fast, but it was in Australia before venture capital was really around. It started as a consulting company, which then we made into a software cloud company. And so we were self-funding it. And of course, cloud requires a lot of capital infrastructure investments. And the only way you could get that infrastructure was through giving personal guarantees. Even though it was run as a business, it was given through personal guarantees. And at some point, we took our eyes off the consulting business, which was the cash cow for the cloud business. And eventually both kind of went down, right? We weren't taking care of both of them. And look, in business these days, in most places in the world, business finishes, you shut up shop, and it's not great. It's very hard to go from thinking a company's worth 100 million to zero. But I had the worst of all worlds, where we had these personal guarantees. It meant that I was on the hook, or I had to declare bankruptcy. And like, my dad was always like horrified at the fact of declaring bankruptcy. And in Australia, bankruptcy laws are such that you're never really off the hook. You know, you have to give back your passport and a whole bunch of things. And so I finished that in 2013, and I moved to Singapore, and I was working for places like Amazon and Facebook, but I was paying back those debts. So I was basically negative for 5 years after I finished that business, you know. So that basically took out all the money I made in my 20s, took me to not zero, but negative, and it wiped out probably 8 to 10 years of my life.
Quick one. I want to thank our partners who help us make this show possible. I'd like to thank our friends at Jupiter, the DeFi super app. Anything you want to do on chain, from trading to earning yield, you can just use Jupiter. Personally, I'd recommend getting the Jupiter wallet on either your laptop or your phone, 10 times faster and 10 times cheaper than the competition. You're gonna love it. Thank you to our friends at Paradex for supporting this show. Paradex is the leading perpetuals decentralized exchange with zero fees, deep liquidity, and privacy. Season 2 runs through the end of January, so you do not want to miss this one. Trade on Paradex and start earning points by using the link in the description down below. Thank you to Mental, the distribution layer that connects traditional finance and on-chain liquidity for real-world assets. To accelerate this vision, Mental is running the Mental Global Hackathon and is inviting developers, founders, and innovators to design, build, and deploy scalable real-world assets and decentralized products on Mental. Check the description down below to participate in the Mental Global Hackathon and make a difference. At When Shift Happens, we're huge believers in freedom, and privacy is at the core of it. That is why we partnered with Zashi Wallet, the easiest self-custody wallet for private transactions. You can send, receive, and spend Zcash without middlemen or surveillance using Zashi, the wallet that was built by the team that launched Zcash in 2016. What happens if maybe you don't know, but what happens if you declare personal bankruptcy? Because there's a lot of big founders stories, especially the guys who take a lot of risks, sometimes do kind of shady things. They actually declared bankruptcy multiple times through their life, but they're still rich as fuck. So what happens concretely?
So it depends, I think, from country to country. In America, for example, you can use bankruptcy as like a protection layer from which you can restructure your debts, and it's much more generous to entrepreneurs. When I was living in Australia, at the time, they've actually refreshed it a little bit, but it basically means that like you have to either agree to pay back over 7 years. It was very punitive at the time. Or you have to give up your passport and you can wipe your debts, right? But it's much more punitive. It's much more punitive in Australia. It's basically like pay it back or live a very knocked down life, you know? This is in America, you can kind of like walk away from your debts. And so I was living in Australia, so it was the very bad option. I think in America, people use it to restructure debts. And I think it's also because in America, people are getting sued all the time. So they have to use this protection barrier, I guess.
So if you give up your passport, you have to stay there forever?
Yeah, now they've lightened the bankruptcy laws to allow, because it's not very conducive to startups. But at the time, it didn't exist. I never actually declared bankruptcy, but I just chose to pay back the debts as much as possible. And eventually, cut deals and finish that whole thing.
What did you learn from this kind of first crazy startup experience that make you a much better founder today at Kast?
Well, I think the thing that I learned the most is how to manage cash flow as a business. Because you think that you've got infinite cash, like even if you raise money, but that scenario analysis of like, what if something goes, okay, things are going well, we're making positive cash flow. But it's only when you learn that, hey, what if like 2/3 of my business disappears or more? Could I still make cash? How long would I have to run? So I think a lot of founders the first time around think, I've got enough cash based upon the current burn. But they don't think about what if disaster strikes? How much cash would I have then? So it made me ultra paranoid founder this time around about everything. Not in a bad way, but just I think just enough in a good way to protect against bad things happening. And even though we have lots of really good investors, I never wanted to rely on the investors. I want the business to be very substantially cash flow positive and a very, very well-run operation.
You mentioned before, for the first startup, we did this with our own money.
Mm-hmm.
Kast, you have investors.
Yeah.
What's your view on you've done both,
mm-hmm.
on raising money versus trying to do the thing on your own?
Well, at the beginning, I was very willing. I raised a small amount of money in the hundreds of thousands when I told my investors, who were mostly my friends, that like, hey, if this goes wrong, I'll pay it back. So I was backstopping it personally at the beginning. And
for Kast?
Yeah, well, just because before we had institutional money, you know.
Mm-hmm.
Then when you get institutional money, my first thing was that I need to make this business very lean as quickly as possible, so I'm not burning through this institutional money, right? So I think it's good to raise money from investors because they can add value. But at the end of the day, they're investors and they want a return.
100%.
And so, you know, obviously they can help you scale. Like, you know, at some point Kast may raise in the hundreds of millions or even billions because we want to go to some crazy scale, which is very hard to do personally, you know. But I think a lot of people in startups, they go and raise money and they think that raising money is the result.
100%. And they celebrate it like, hey, we've made it. But actually, it's the beginning of the adventure and probably the beginning of a lot of troubles also, problems. Exactly.
Yeah. And you will have much more control over your investor group if they realize that you don't need them in some ways. I say that with all due respect to my investors. But if you don't need them, if you can be very cash flow positive, you can run a good operation, it's much better to have cash coming to you when you don't need it as opposed to having to need it. Yeah,
you have the leverage, right?
Yeah.
Well, recently I had Paolo from Tether in your seat and we're talking about, I was saying, you're trying to raise 20 billion at 500 billion valuation. What are you going to do with this money? And then he was like, yeah, you know, we're making 13 billion in profit every year. So it's not about the money, it's about sending a message.
Yeah.
Like you build the ultimate, I mean, maybe that's like another level, but you build the ultimate leverage where you can go faster with the money, but you actually don't need it. And you can be much more, I don't want to say relaxed, but less pressure and much better leverage when you negotiate for sure.
Yeah. And look, I think the thing I've learned about fundraising is sometimes it's also signaling as well. And I think we're getting to that point where we might raise very substantial amounts of capital in the hundreds of millions, potentially, you know, over the next 1 to 2 years. But part of it is also like certain investors and certain signals can ordain winners in a market, especially a market that's very new. I think the concept of a crypto neobank is something that's getting a lot of meta now, but really we were sort of at the origination story of that. And so I think what you can do is send a message saying, look, we're going to be the winner, or there's going to be a handful of us, and everyone else who tries, like, this is the bar you have to climb now.
You told me when we talked the other day, I had to eat the humble pie, which is an Australian expression.
Yeah.
Can you explain me exactly what you mean by this?
Well, after my last business, like, you know, we thought it was worth nearly 100 million because that's what, you know, we were trying to raise money at, etc. And then it went to zero, negative, as I told you. And so what did I have to do? Like, I had to go through this process of like going and getting a corporate job for, you know, $150,000, $160,000 a year base salary, which is fine, good salary, but there's a big step down from thinking you're worth tens of millions of dollars, you know? And I think this is a hard thing as a founder that people don't talk about, is just that eating humble pie. You just got to get humble and realize that it doesn't matter how much you think you're actually worth. You're worth what you're worth. Right at that time, you know, and so I thought I was worth tens of millions, and now I'm worth mid-$100,000 salary in a corporate job. And that's life. You better just eat it and get back to it and work your way through it, you know. And there's no point like stewing on it. Of course, naturally, as a founder, I can tell you every founder who's gone through this process has probably struggled with it in some way, shape, or form. I struggled with it for a while. I don't think mentally I was quite there for some time. It was a struggle, but you just have to push through and get ready to bat again in startup life.
How important is ego or lack of ego in the entrepreneurship world? Because you need to have a huge ego to start a company and think, I'm going to be one of the ones going to be able to whatever, 1 out of 10 company that succeeds, or probably even less after a couple of years, right?
Yeah.
So you need to have this huge ego of like, I'm better than everyone else.
Yeah.
But then you can't have the freaking ego because you're going to get beaten down so much all the time.
Yeah. It's not about being beaten down. I think the thing is that, look, if you ask me, and I'm going to go on record now, and so people are going to think I'm effing crazy, but I think Kast is a $1 trillion plus company, and I think it's going to be 100 billion if we miss, and 10 billion if we miss really badly, you know? And so, because the opportunity to build a global bank is so big, right? And so when I look at investors and people and friends, like my job is to kind of not listen to them, because their worldview as to how big something can get is only to a certain view. And so if I absorb that, then I will downsize the potential of Kast, you know? And so my view, you have to be a little bit crazy to think this thing is just so enormous and the potential is so big, even if you're just tiny right now, right? And so you need to have that ego. But then where the non-ego bit, and so people are going to, like, through their own jealousy, envy, not understanding, you know, thinking that it's not possible, thinking they're in a big company and you know, you're down here. How could you think that you're going to be possibly bigger than them? Are going to try to beat you down. But that's not the bit about like lacking ego that matters to me, because that's just like one ego versus another. The thing that I think where you need to lack ego is just doing anything you need to make that company fine. Like I will go to the warehouse and take merch at the beginning. I don't do it as much anymore, but I'm happy to. And carry that merch. I was talking about this with another founder to an event. And if that's what needs to be done, that's what needs to be done to build your company, you know? And so you should have, if I need to respond to a customer who spends $50 on their card a month to sort out their customer service problem because they're screaming about it, then I'll do it, you know? And I think that's what I think can create a great founder experience, is if people know that you're willing to do the absolute dirt, the most basic things, but you still have this vision to build a $1 trillion company.
I saw you the other day retweet a tweet of someone very mean, very angry.
Yeah.
And saying, this is shit product, this is shit service. And he said, hey guys, like I'm going to retweet that and answer to that. And almost no one would do that, but I'm doing it, right?
Yeah. Yeah, this person was very unhappy with the customer service issue. And I you know, when we looked at it, it was kind of like, it wasn't totally our fault, but that wasn't the thing. Like he complained about it. I picked it up, I retweeted it, and I basically said, look, if you have an issue, I don't care who you are, you know, you come and reach out to me and I'll try to respond. Now, of course, you know, I'll get bombarded, but I'll try. And I sent it straight to the COO. We took it straight down through the customer service layers. Because the thing is, like, I don't want to build a company that feels like your telco or your bank, you know? And that's the difference. Like, you got to build a company where you're like, hey, I'm going to hit the founder, and one day maybe I can't scale myself, but maybe I'll try to build a team around me so that people always feel like they can go straight to the top, and they'll take it all the way through the organization to get an answer. You know, I don't want people to feel like it's partly because I'm building this company for all the things I hated. You know, I hate these call centers and these, like, you know, there's these textbook answers and things going around in circles. And so we won't be perfect at that, but I mean, we'll really try, you know, and that's going to be the challenge as we scale, but that's what we're really going to try to do.
And Twitter is amazing at that. And if Elon can do it, which he does often, right?
Yeah.
Probably anyone can do it.
Exactly.
We don't have an excuse.
Exactly. Exactly.
You said before, I think Kast is a $1 trillion company. Some people think I'm crazy. Are you born crazy? Or now that you're in your mid-40s, you got there gradually by taking more and more risk and thinking bigger and bigger? Like, how does someone get to that? Because for entrepreneurs, I think that's kind of always the problem. Maybe also it depends where you come from. I'm Swiss, so I'm more like slow, but like try to do things profitable and grow slowly and all that stuff, right? And I'm like 33 now, my third company, and I'm like, how do I get to think like that?
Yeah, I think craziness scales over time. You know, when you're like younger, you're like, hey, if I build a $10 million company, that would be crazy. Yeah. And then you're like, well, if I could build a $100 million company, that would be crazy. Until a few years ago, I was like, if I thought built $1 billion company, it's crazy. And Kast is not $1 billion company; it's close, but it's not there yet. And but yeah, I think it's just at a certain point. I think the thing is that like at a certain point as well, the craziness can scale more. Because the thing is that like after a certain amount of money, whether it's $1 billion or 10 billion, or 100 or $1 trillion, like the numbers kind of don't matter. You might as well just go for maximum. You might as well go for something that's going to change the world to the absolute maximum, because now you're kind of clear of you're clear of like 99.99% of businesses, right? So you're just fighting amongst a small segment of businesses.
You said before I was in trouble for a couple of years after this first business, and then I decided to go and make some money. You worked for Zoom?
I worked for Amazon first, Amazon Web Services, very early stage when they were quite early here in Asia. Because I was already in cloud and building data centers, so I knew everything about it. So I went there first. And then I went to Facebook to build their enterprise product, and then Zoom very early, and then Circle.
But Zoom made a difference. Zoom made a big difference.
I think in terms of money I made, because I was like in Amazon making a lot of money, but paying back a lot of it. Same thing at Facebook. And then I was like breaking even. And then I took a huge pay cut to go to Zoom, like 40%. And, but they had unlimited commission. And so I went there and just absolutely like, I was like, it was almost like this is one of my last chances to just make it huge. And then this was pre-pandemic. And then when the pandemic came, I was like, I need to rinse this to the absolute maximum. And so not only did everyone do well at Zoom, but my team was the number one team in 1 year. Me and Izia, who now works at Kast, she sold the biggest deal in Zoom's history. So we went to the absolute, we went to the absolute maximum, and did great things for Zoom. And I learned a lot from, I learned a lot from different companies, but I learned a lot from Zoom in particular, I think. I think Eric Yuan is like an amazing entrepreneur. I learned a lot of, I think, Kast, weirdly, even though it's more of a crypto fintech company, replicates a lot of what Zoom, components that Zoom has. Yeah. And I think part of that is that Eric is, a Chinese immigrant, when you look at him, he's very simple, very humble, but is super ambitious. Zoom has great Western branding, but then has, a lot of engineers, like 90% of the company are like engineers in Asia, just working super hard to ship products super fast. And so they outshipped everyone, And so a lot of that is how, we're building Kast as well. Like we want to outship everyone, but have beautiful branding at the front as well.
Why do people call you the stablecoin guy?
I think I actually made it for myself.
I would say maybe why do you call yourself the stablecoin guy?
Well, I was just like very deep in stablecoins, and I was at Circle before running Asia. And so
you were the CEO of Circle Asia.
The Singapore entity, and so that's the main Asian entity. And I set them up here, and so just went very deep on stablecoins and like just learned everything about stablecoins possible. Now stablecoins really became hot like in the last year, right? Yeah. So I spent many years before that really going very, very deep on stablecoins. And to me, the thesis is very obvious, right? Of how deep it would get. But like I think I know more about stablecoins than nearly anyone, but probably top 50 in the world, or maybe better,
Tell me something I might not know about stablecoins.
I don't think, there's many things I can tell you about stablecoins, but 99% are US dollars. And that hasn't shifted for pretty much since the beginning, as much as people try.
How much is US dollar, not in stablecoin, US dollar versus other currencies? Do you know?
In the world generally?
In the world.
Well, this is the other complex thing. So they say like roughly the world uses 60%, 70% in USD for trading. Now there's lots of different currencies, but it's the main trading currency. Maybe US dollars are like 25% to 30% of the actual world's currencies, but 99% of stablecoins. And I don't think that's ever going to shift, by the way, not for a long time. Because there's a few reasons, and I've batted this off because a lot of people are like foreign stablecoins. There's a few reasons. One is that stablecoins are money on the internet, and the internet trades in dollars, right? And so for that reason, also it's like a liquidity game, right? So none of the others have got enough liquidity, or the trading pairs in US dollars, or the traders in US dollars, or the selling of goods and services on the internet is in US dollars. So it just has this huge dominance. And my thesis is that like US dollars are going to pretty much wipe out next to most currencies. Already have to some extent. A lot of currencies are dollar linked or dollar basket linked, or they're just like getting demolished and they'll just switch to US dollars soon.
And the stablecoin phenomenon is one of the reasons, or is the main reason why this is going to happen?
I think it was going to happen anyway. And then I think there's a huge acceleration because of stablecoins. I think what most people don't understand is that dollars exist in like 3 different places. So there's like dollars in the US, which exist within the US. Then there's what they call Euro dollars or Asia dollars, which are offshore dollars, which are outside the US banking system per se. And then there's like informal dollars that float not in a bank, through Havala and other means, right? And this is why stablecoins are magic, because it's the first time that all 3 systems have been unified in a single layer. You can have dollars in the US, offshore, informal, in a wallet, in a mobile phone, and you can send it to anyone, anywhere, permissionlessly, pretty much. And that is why the TAM of stablecoins is so huge, and the businesses you can build on top of them is just enormous.
Quick one. I want to thank our partners who help us make this show possible. Thank you, Trezor, my favorite cold wallet to store my crypto and make sure I sleep well at night. If you want to order a Trezor wallet and sleep well at night too, you can use my promo code WSH10 to get a 10% discount. Big thank you to Bitwise Asset Management for backing today's conversation. Bitwise is a crypto specialist asset manager with more than $15 billion in client assets across 30 plus crypto solutions, including ETFs, index funds, alpha strategies, staking, and more. However you like to invest in crypto, Bitwise has something for you. Thank you to our friends at Sui for supporting this show. Sui is a scalable layer 1 blockchain that's fast, secure, and affordable, built by previous Facebook developers, and that delivers the benefits of Web3 with the ease of Web2. Thank you to Story Protocol, the IP layer of the internet, for supporting today's conversation. Story is building an open system for creators to register, manage, and grow their IP on-chain. Whether you're building words, stories, or characters, Story Protocol gives you the tools to protect and expand your creative universe. To support this show, please check the sponsor links in the description down below. You're a stablecoin maxi?
100%. Have to be. I'm the stablecoin guy.
Are you a USD? Are you a USD maxi in terms of, because there's this theory in crypto, and if we look at asset prices over the last 10, 20, 30 years, it makes sense, right? But it's very hard when you're in crypto and you understand all these things and you understand debasement, fiat currency devaluation, asset price inflation, wage deflation. The dollar is worthless.
Yeah.
But at the same time, the dollar is getting stronger and stronger versus other currencies. How do you think about that as an investor?
Well, I mean, so at one point, dollars were linked 100% to gold, right? And then obviously that got separated as a hard fix. And so now dollars are based on the fact that the whole world wants to use them. And so as a result, it has value, because if everyone wants, same way that gold has value, because everyone wants it, right? At the end of the day, it's a piece of metal which shines, pretty much useless. But if everyone wants it, it has value, right? And so I think the dollar will continue to get stronger for the next decade, in terms of like it's going to eat up all the other currencies minus some very big ones like the Indian rupee, euros, Japanese yen. You know, there's be some very big ones, but pretty much the rest is going to get absorbed by dollars. But then my personal belief, and this is in my long run writing, in like 2040, give or take, the dollars will become abundant, but then there'll be something that happens to the US, because the US ultimately controls dollars. Around that time, from a macro point of view, other economies are going to get substantially bigger. India is going to be substantially bigger, China, and then all these other countries will become bigger, such that the US will become relatively smaller. And there'll just be this weird scenario where the world is reliant mostly on dollars, but it's not no longer the biggest economy in the world. And they will force migration to something else. And I think you'll see this new type of stablecoin appear, which would be, the BRICS are trying to do the gold-backed one. But I think there is a world in which you could have a Bitcoin-backed stablecoin, I guess. So at the moment, it's also like a numerical thing, right? Like it's very hard to price something in Bitcoin because it's hard to think about how many blah, blah, blah is a Bitcoin. But, if you just made Bitcoin, basically a Bitcoin, when it's $1 million is 100 million Satoshis, right? Right. So if you divided Bitcoin at $1 million into 1 million, then every piece would be 100 cents and $1, right? And so I think there's a world in which you're going to have a Bitcoin dollar per se, or Bitcoin stablecoin eventually. But for the next 10 years, I would just stick to dollars.
So you're the stablecoin guy. You run a Circle Asia Pacific. Circle obviously is the company behind the USDC stablecoin. But at some point you say, about 10 years after your previous company didn't work out, you say, now is the time to go and I need to build this thing called Kast. I need to do that thing around stablecoin. What did you see that made you take the leap and say, I'm going to try this thing again, go 100 times bigger and harder?
I think we were talking about this, like conviction builds over time, right? And so I did write a paper around how I think this was going to progress and how this was going to happen over the next decade. But at the same time, I was pretty burnt out after Circle with all the travel, etc. And so I needed a little bit of break for a couple of months. But then my view was that stablecoins are going to go very big. But everyone was focused on the stablecoin itself, right? And I was there at Circle at a time when interest rates are 0.25%, net interest margin was 10 bips. Now, if interest rates go back to that, right, then stablecoins are suddenly not interesting from a profit-making layer themselves, right? And so what I believe that people were missing was actually the biggest thing that the world needs is a global bank built on top of the stablecoin layer, right? Because at the moment, stablecoins are used by a few people, and your experience is either an exchange or a wallet or things that are pretty clumsy, right? But what you actually need is you need a bank that people in like 150 plus countries can use. So for context, like Revolut and Wise, you can use in about 40 countries. 30 of them are Europe, right? So it's like Europe plus 10 other countries roughly. So there's really no global bank per se that's been built. And I think stablecoins are the only opportunity upon which you can actually do that. And the exchanges and others I feel are distracted in terms of just printing money off trading to build something that initially is a pretty boring business in terms of revenue, but has a much wider use case. For example, a few 100 million people, maybe 200 million people trade crypto, but there's at least 2 billion people who need a bank for US dollars today and probably don't have one, right? And so the market is much bigger. And that's why I said, okay, like, let me go and build this very hard thing. By the way, it's like, also to use stablecoins, the thesis is like, you can just use stablecoins and everyone use stablecoins, but that's not here yet. That's not here for another 5 or 10 years. So you have to not only build this bank for stablecoins, but you got to make it interact with the real world through cards, through what we call on and off ramp, the ability to send money anywhere in the world. You have to go and get all the licenses. You have to build customer service. You have to build all the hard old school stuff that crypto people don't like doing. And I like doing hard stuff. And so that's why I chose to do it, because I felt like the moat was the difficulty of doing it. Like most crypto people are short-term thinking. They don't want to do the hard stuff. And I think that was where I found the sweet spot.
Can you explain Kast to your mom in 2 sentences?
It's a bank for anyone in the world, nearly anyone in the world to use, that has a simple cash account, savings account, and a card. And my mum can use it, and she's in Australia, and her cousin she's got cousins all over the world. And in pretty much any country, they could use the same bank. And that's not something that happens today. That they would all be on a different bank.
You said before, I took the leap and I had this, like, I understood I need to build this thing. This was 15 months ago.
Yeah, we're in our 16th month of Kast.
How has your conviction level evolved in the last 15 months? Because you needed a lot of conviction to start.
Yeah.
But probably you've seen a bunch of things and you've seen the actual numbers now,
Yeah.
16 months later.
Yeah. Yeah, I mean, look, we've been very lucky. I'm going to touch wood if I can, that we, since launching Kast, have grown every single month without fail. And during that time, there's been crypto bull markets where it's grown a lot. And then there's been some really bad markets when Bitcoin went from 110 down to 70. But even through that, we've grown every single month. And that tells me that there's just incredible demand for a global banking style product, whether crypto goes up or down.
Absolutely.
And so my conviction is now near infinite.
Completely unrelated to exchanges and the Bitcoin price.
Exactly.
You realize, oh shit, probably in developing countries, mostly or first. I mean, you can tell me, but there's all these people who need an access to the dollar and a place to just store their wealth in dollars, which in crypto you think, you need to store your wealth in Bitcoin. But actually, the majority of the people, they don't have this, they have another problem.
Yeah. So your analysis of it sounds like a lot of my first investors until I explained to them that because people think that stablecoins are a developing country phenomenon, right? But what's different about Kast is we built a premium product. We let everyone else really go after the developing countries first. It's not that we're not going to go there. It's 70% of our users are in developed countries. And what I found was that, firstly, I built the company almost for myself. I live in a developed country. But crypto people are impatient, want a great product, want a premium product. And a lot of them are in developed countries. And they're severely underbanked. It's not that they don't have banks. It's just that they mostly hate their banks. And they mostly find the experience is terrible. And so they were just waiting for someone to come and build beautiful product for them that really solved a lot of their problems. And we started with the card, but now obviously we're going to be a lot more than that. And so, yes, the developing countries are great, but I think people have greatly discounted the need in developed countries.
No, the funny thing is I'm like the prime customer. I use Kast all the time. I haven't used a normal bank with more than a few $100 since 2015 or 16 that I used Monzo because I was based in the UK, right? And Revolut. I mean, then I got banned by Revolut because I was sending pounds to Coinbase in 2019 to buy Bitcoin. But completely, I was like, all these banks are shit. I need to use neobanks, right? And then I'm in crypto since 7-8 years. And I live my life, I just, stable coins all the time.
Yeah.
And I was like, how do I never off ramp? Because it's a fucking nightmare. I have a problem with my bank, they're going to shut me down, whatever. And then Kast arrived. And I'm like, amazing, beautiful. It's super simple. I recommend anyone to download the app. Start spending your stablecoin. There's a link in the description down below, guys. It's very simple. That's the most important thing, right?
Yeah.
You said before, crypto people don't like the hard stuff, right? And you're building Kast, which is, for the moment, a super simple app. Spend your stablecoins, right?
Yeah.
You have 170 employees after less than 2 years.
Yeah.
This sounds to me like the opposite of the crypto entrepreneurship dream, which is I can build a multi-billion or deca-billion or whatever potential future trillion company with 10 to 20 employees. Why are you doing this? I mean, why?
Do I want a lot of employees? No, it's not what I set out to do. But I'm here to go through the hard path, right? And so there's a world in which in the future, when everyone has stablecoins, that you could build that 10-person bank, right? And because everyone has stablecoins and, the utopia will be there. But guess what? That is at least 10 years away. To the point where everyone that you want. So even if you live a life where you've got stablecoins, all your friends have stablecoins, you have to interact with the real world still, and that's going to go on for at least a decade. And so we have what we're calling the big build, which is it's not just cards, but it's savings. It's being able to send money through fiat rails everywhere. It's a full-blown bank-like product for anyone in the world, accepts people from like 150 plus countries. And that requires a lot of engineers, like nearly 100 engineers. By the way, no one has built this before. No one has built the rails to go everywhere. And so we are just investing super hard in building all that, the financial partnerships, the engineering and everything else that goes behind it. So the app looks super simple to you. You just be like, hey, I can send money everywhere. I can spend it. I can deposit stablecoins, crypto. I can earn rates on it, DeFi, whatever. And we do all the hard stuff, right? But also, by the way, if you do that, it's a huge moat to the next person who comes along. Because at the moment, the crypto neobank meta is like, hey, anyone can build one, right? And I'm like, yeah, like maybe you can slap a card on some stablecoins, but you're not going to be able to build like a full functioning global bank. And also, by the way, the bigger you get, the more regulators are going to want to speak to you, the more compliance you're going to need. And so we're building all that backbone and doing the really hard stuff.
You said no one has done that before.
Mm-hmm.
Crypto is 16-year-old. Stablecoins are 12 years old.
Mm-hmm.
I think Tether is 2013, right? Or something like that.
Something like, yeah, makes sense.
So it's not new. Why has no one done that before? It sounds so logical.
Yeah, I mean, basically there was like this wall between stablecoins on one side and banks on the other. And there was just, little gaps where you could come in and out, And so you had to wait for this time. I think the time is perfect for what we're building, where that gap between banks and stablecoins is sort of like breaking down, definitely in the US and more parts of the world. So they're accepting people to on and off ramp via stablecoins in more parts of the world. But it's still a country by country thing. And that's why we have so many people, because we're trying to break it down in every single country. So you can send stablecoins as cash or the other way around in nearly any country in the world, right? And but that's a country by country exercise, almost. And we work with partners. Sometimes we do it directly, but it's very hard, heavy lifting, And the people who are there already, who have the Revoluts, the Wise, and others, they built it in a way that's for traditional money and licenses. They haven't built it in a way that's stablecoin ready. And most people take on the challenge of building this in one region or one country. The audacious thing about what we're building is we're trying to build it for more than 150 countries. And 11 out of 10 VCs think I'm crazy. Try to do this. They think it can't be done. There's so many problems around acquiring customers, scaling profitability, building all the licenses. That's hard. But I think the thing is that if you build it, the opportunity is just immense. It's $1 trillion company, And so that's why we're going after it.
Stablecoins are amazing, but they're still way too complex to use.
Yep.
You need to copy and paste addresses, select a stablecoin. You need to have a favorite one. Select a chain.
Yeah.
Often, not on Kast, but often you need to have ETH or Sol or Tron to be able to pay for gas fees.
Yeah.
How do we simplify all this?
So this was part of the product decisions we did at the beginning, right? When you deposit stablecoins, you can deposit multiple chains, multiple stablecoins, upstanding legit ones. And we just showed you $1, right? And then when you want to send it, you don't have to swap it or bridge it or do anything. You just choose which stablecoin or which chain, or you can send it out as cash, as dollars. You don't have to have gas. We simplified that whole thing. So we have a huge treasury management team, all ex-OTC traders, who are in the background moving all the money and managing all this to make it extremely simple. You as a user, you just go about life, and it seems abundantly simple, whether you send cash or stablecoins, chains, the type of stablecoin, it doesn't matter to you. So others didn't go to, you got to choose the hard path. We chose the hard path from the beginning so we could achieve this, but others don't do that. They make you still swap or bridge or everything else. But that user experience unlock means that people go, oh my God, this is so simple. And they tell people, right? And so our CAC is super low because people just are like, hey, this experience is so good. Let me go and tell people about it. So we invest in the hard stuff, and then we have to invest less in marketing as a result.
You said the average user uses the app 30 times a month?
Exactly. 30 times a month is the average for a user. 30.
So once per day.
Yeah.
Are you a fintech or a crypto company?
I mean, we are a fintech in the way that we still have to hold licenses and do everything the traditional way, but we're a crypto company in the way that we think. So the difference is that like a fintech is built with what we call lipstick on a pig, right? And the pig is traditional finance. And so you're just taking the licenses and the traditional banking and you're making it look prettier, right? Like no offense, I like these companies, but a Stripe and a Revolut and Wise, they're all lipstick on the pig, right? Versus we are trying to build crypto rails and ultimately we'll have a full crypto state, like a native bank. And the second thing is that we think like crypto people from the beginning, right? So we have this view that like, we're not bound by like, we want to give this to as many people as possible because we think that crypto should be completely open for anyone, right? We're not viewing it as like, hey, we can make the experience better in this country or this region, right? We think have a complete worldview of it, you know? And so in that way, I think we're definitely a crypto company and we are trying to hire much more crypto native people these days rather than fintech native people. But a lot of the hard stuff we do is fintech.
How likely is it that Revolut or Robinhood nails this and becomes better than Kast?
So I would say this, and everyone's going to give me shit for it, but there's 100% chance they're going to try. And they're already trying. They're already adding tokenized stocks, and they're already trying stablecoins and a whole bunch of other things, right, in the regions that they are. But the chance that they will beat us on that global view, to me, is like 1%. And the simple reason is that what happens is that the leaders of these companies, a Stripe, a Revolut, Robinhood, they get up, they do beautiful speeches, they tell them how they're going to change, they're going to do all these different things. And then you go and speak to the people who work there and you realize that 95% of them don't know about crypto.
Of course.
And then things just get bogged down. And so they release a product and they say, hey, this is available, but it's only available if you're American in this state and we've approved it for this use case. And so making it widely available will take, another 2-3 years. And it's like, okay, fine. Like by that time we can build it all.
The same reason why a traditional bank can't really compete with a Revolut.
Exactly.
Kind of inertia. You have like this huge mass of money, people going like that, and like just changing direction is probably very hard, if not impossible. And I'm also thinking, for example, if I'm Nick Storonsky, I mean, obviously these guys are hungry as fuck, and Revolut is worth $75 billion, probably 200 billion soon. You can go and start everything again-ish, right? But you're also worth 20 or 30 billion, and you probably at some point take the company public or sell it or whatever, and you're like, want to go through all this shit again and start from scratch with a whole new set of people.
Yeah, and look, the thing is that in the history of technology, there's the S-curve of innovation, which means that you're at the bottom, you can build products for a small group of people that become the big group of people. But if you're Nick, it makes much more sense for you to go after getting a license for a bank in the US and trying to win the whole US market. That moves the needle for him. At the amount of revenues we have, it doesn't move the needle for him. He has to think many years out before he's like, oh, this could become really big. And so it's hard. People also forget that like a Revolut, Robinhood, these are 10-year-old companies. Stripe is now a 13, 14-year-old company. They're not young anymore. They're like getting middle-aged, and they're basically our age, now. And so there's an element of, I think it's harder for them. I think Stripe is doing the right thing by recognizing that it's very hard for Stripe. So they're just doing these acquisitions and then letting them just kind of continue on. That's probably the smartest way to do it. But to build it themselves is difficult.
So the way to do it is acquire, but I'm not trying to integrate your thing too much. I'll let you do your thing because this thing might take over. Like Zuckerberg did with Instagram, right?
Exactly.
Like Facebook is huge, but Instagram could just outgrow it, which it probably did by a lot, right?
Exactly.
And then I own the thing that disrupted me.
Exactly.
Yeah.
Exactly.
Revolut took a long time to become profitable.
Yeah.
I don't know how many years, but probably a lot.
Yeah.
And a lot of money. Kast is a 15-month-old fintech and is profitable.
Yeah.
With 10 million in funding.
Yeah.
How is that possible?
I mean, I think part of it is my paranoia from my last failed startup, but I think it's also just like things move a lot faster, like we aim to be 100 million in revenue within 2 years. For context, like Revolut and Nubank took more than 5 years to do that, right? And we're well on the way. We're almost halfway there, pretty much, in 15 months. So we might actually get there even sooner than 2 years. And I think it's just because of the rails that you're building in, market is just so much bigger. I think a lot of things are more off the shelf. And the second thing is that I think you can build leaner compared to before as well, So I think we're not going to be the only ones. There are going to be others that grow, probably, even faster and even leaner. I think in pure crypto companies, there's ones that obviously way more revenues than us and much leaner teams. But in fintech land, I think, we are pretty optimal. It's a new world.
It's a new amazing world. The best.
It is.
You said before, people will think I'm crazy.
Yeah.
But Kast is $1 trillion company, a global bank for 1 billion people. Can you explain Kast vision?
Kast, let me take it back from the vision, because you just basically said my vision. A global bank for 1 billion people, which is $1 trillion company that makes, us and our users and everyone else, who believes in us. I say Kast is for believers, wealthy along the way. That's fine. But I think ultimately it comes down to the point that I told you at the beginning, right? I left Sri Lanka when I was young and I moved to Australia. I went from wealth to no wealth, but I went from no opportunity to a lot of opportunity. And I saw my cousins, my family were left behind in a country where they would earn 1/10 of what I would earn in Australia for the same job, right? And so ultimately, like, leaving aside the money and all the stats and biggest and leaving all that aside, to me, it comes down to equality of opportunity. And something magical was created 30 years ago, which was the internet. Which means it kind of mattered a little, still matters where you're born, because you still need an education and other things. The internet allowed you to learn and get jobs and, working for people anywhere in the world, trade goods. And it kind of flattened the world economy to an extent. So it mattered a little bit less what passport you had, which country you lived in. But the money problem still existed, because you could still only move money in a certain way. So really what our vision is to build a bank that allows people to have a bank that is global in nature, that is the highest quality, no matter where they live, that they can have the maximum opportunity despite where they're born, where they live, etc. And that is formed by who I am and where I life experience that I've had. And that ultimately is what Kast is about. Leaving aside the flashy gold cards and all of that stuff, that's ultimately where we're getting to.
Tell me about the gold card. Take it, show it to people.
Sure. Yeah,
What's the flashy gold card?
This is the flashy.
There.
This is the flashy gold card. I mean, this is a solid gold card. Only 2 companies in the world actually make one. It's us and Robinhood. And yeah, it's actually at the current gold price, more than 4,000 US of gold. Costs like 10,000 US to make one. But I think the main reason we made it was because, firstly, like my view on product is like build something for the top end, which really were desperate, especially in crypto people, for something beautiful that they could love. I felt they were underserviced, and a physical product is always great, right? Because in crypto, everything's a virtual product, but having a physical product you can touch, you can show is really important. And so that's why we created this. We just released this is one of the first ones, actually the first one, which is mine. But I think the thing was that, and we're going to make more crazy, flashy products, but it's also, firstly, it's a little bit of great marketing. Secondly, it serves a consumer that felt like they just weren't served. They weren't looked after. They were probably ignored, probably debanked from the others that had a great product. But it also, the one thing I've learned is like whether you have money or whether you have no money, everyone has aspiration, right? And so I think it puts Kast in this bucket, this aspirational product where you may not be able to afford to get an invite to the $10,000 card yet. But goddamn, like a lot of people believe that they're going to get there one day, right? And I think that's the amazing thing about crypto, because it can take you from the trenches, from nothing to something. Maybe some of that is through gambling, but some of it is also through just building, projects and other things which are very meaningful. And we want to be the company that delivers on that aspiration to people, allowing people to like say, hey, like there's something that I really want, and I want to get to that stage, even if I'm not there yet. As well as the people who are there who are like, hey, I want to flex something as well.
I think it was about a year and a half ago. I'm probably a bit less. You reached out to me and told me we're building Kast, Revolut on chain. Revolut is a neobank. And now there is, about 15 months later, just magically this neobank narrative in crypto, like we kind of mentioned before. Kast was doing this neobank thing way before it became a trending narrative.
Yeah.
Why do you think people are talking so much about neobanks in crypto today?
I think partly because of us, frankly, you know. And look, the thing about meta and narratives is that sometimes in crypto that's what they are. So I've seen a bunch of companies and people that I know, even founders that I know, trying to jump onto this narrative, and I welcome it because frankly the market is so big that like we need more people building. The question I ask is, are they actually going to go through the hard stuff of employing hundreds of people and building all the hard stuff to actually build a great product, or are they going to make it into a narrative which would end up, as a token, and they never build a product, So look, I don't mind the narrative because obviously it's good for us if we're one of the leading people. It's a thesis that I had for a long time, and a lot of people ignored it and they were just focused on other things. So it's good to see that is finally coming to bear as something real. But I'll be interested to see who's going to like knuckle down and build the product to its full capability, and who is just going to try to jump on the narrative. For us, we're very long-term focused. I have a multi-decade view of things, so we're just going to keep building and keep delivering value to our users. And some will maybe take the narrative away, but ultimately you got to deliver products for people.
Who's going to do the hard work?
Exactly.
The hard infrastructure work, how you call it. How can someone, because it's this new narrative and it looks simple, Kast, right? And probably this other product also will look very simple. Spend your stablecoins, earn some yield. How can someone know if the hard work is done underneath the surface?
Yeah.
And therefore, if they're taking risk by spending or keeping their money there?
Well, I think the difference is that we set out to serve as many people as possible in the world. A lot of the ones that add a card, they're restricted to just Europe or some other places. The other thing is just the amount. You're going to see a lot in Kast this quarter shipped. It's like shipping season, as I call it. And so you're going to be able to send money to 70, 80 different countries and receive money from countries, like cash to stablecoins. You'll be able to borrow against your crypto. So it's going to be it's accessible to people in more than 150 countries. So it's not like other people will build it in small versions of it, but the full vision of like make this accessible to nearly anyone, make cash move between crypto and stablecoins from nearly anywhere. Give it, you can deposit crypto, you can borrow against it, you can potentially get like an Aave style yield from it all in one place, and it has this amazing user experience, and it's backed by founders and others who are upstanding and come from serious companies who are going to put their face against and back it. When it goes wrong, Kast, they come after me, right? So that's the difference. I think it's not. I'm not sitting behind a anonymous X profile. I'm out in the open telling people what we're building. Exactly. Very happy supporter.
You live in Singapore. I live in Singapore.
Yeah. I'm sure people know where I live. So
I don't know where you live, but I know where the parties are organized. So
yeah, exactly.
Also, you have the security now, so that's maybe not the place to go and come after you at the party.
Wow, it's only certain times of parties.
I'll reinvite you to the studio to do another podcast when I'm not happy.
Yeah, exactly.
What's something that you hold on to, but know that you should let go of?
Look, I I don't know if it's like a very specific thing, but I do keep tabs on people who discounted me and didn't invest and kind of didn't say it's possible. And to me, like building a great company is sometimes like the ultimate revenge on this, because as they say, like regret compounds, and so look, some people do it respectfully, but some people like I think do it out of spite or jealousy or whatever, And so I think of business as a sport. I love winning. I'm ultimately here to win. And like when the team is like, hey, look, the growth numbers are great, we're doing amazing. I'm like, but we're not winning. We're not number one. So get back to shipping and get back to delivering the best experience for people. And maybe I should not be like that.
You should. It reminds me of many years ago, I saw this video of Gary Vee was saying, I don't remember what the exact thing was, but he was saying, he was basically predicting a lot of things that actually came true much later on. And people were making him, it was the Instagram thing. He was saying, Facebook bought Instagram for $1 billion. He was saying, this was a steal. And he was on TV saying, this is a fucking steal, $1 billion.
Yeah.
And people were like, you're fucking retarded.
Yeah.
And then he went and he bookmarked everyone who told him he was retired. And a couple of years later, he came back and he just tweeted like answer to everyone and said, what now, bitch? What now, bitch? What now, bitch?
Okay, I don't go that far.
But basically, that's keeping tab. It's the winner mindset.
Look, the thing is like I'm not Michael Jordan, definitely not, especially not in sport. But like I remember that watching the documentary about him, and he used to apparently on the court make up stories of like someone said something bad to him, like on the court, like, oh, you're a loser, you're gonna miss that shot. And sometimes it was real, and sometimes they would say that he would just make it up, right? Just to force him to play that much better. So if someone wasn't giving him shit and making him an underdog, he'll be like, oh, that guy said this. And it didn't actually happen, And so, but, like having what we call haters or doubters or whatever, it's useful. It's very useful. It's highly underestimated how useful it is to just push you harder to prove everyone else wrong.
What did you invent against yourself and against Kast?
Well,
recently, to make you even more hungry?
Well, I think the thing is that, it's just like when you're going through fundraising, you're going to have people who say yes and no and everything else. And I think it's just like firstly, they didn't build the crypto neobank thesis, right? It was wrong, and then some investors believe, and it's natural that investors also change their mind over time, and some will believe early, some will believe late, but I just think that like, I'm just still convinced that like 99% of people just don't think this can be done. When I say it's at least $100 billion company, if I miss, like 99.9% of people are going to say that's wrong, and that keeps me going. By the way, it's not for my own, like, to make it $100 billion company. It's just like, that's the standard of like, hey, if this is really big and this can really change the world, it has to get to that size, And so I really enjoy that people just still think it's not crazy. We're going through a funding round right now, and even that, and even the investors who believe like, oh, can it only get this big? I was like, no, I'm telling you guys, this is going to be very, very big, way bigger than you actually estimate. And I don't think many people really believe it because they're just caught up in like other things, chains and stablecoins, other things big. And I'm like, this is going to dominate everything. It's going to become bigger than everything, right? And of course, people should doubt it. Please doubt it. Keeps me going.
I love how chill you are saying all that. Hopefully, by watching this podcast, people will help this 99% go down to 98.
Yeah, exactly.
And we'll do another one to bring the 98 to 97.
Yeah, exactly.
Thank you so much, Raags, for doing that, for doing this insanely hard work that you put in every day and every night to make crypto more accessible and more usable to everyone. And last but not least, of course, thank you so much for being a supporter of When Shift Happens, of me and of the team, and in supporting us in our mission to make the industry look much more credible. Because we have a big problem today. We don't look credible enough.
Yeah.
We look like these weird people. this weird, strange, intimidating industry. And all together, by building much better products and by trying to do better education, we can hopefully bring in more people.
Yeah, I mean, we sponsored your podcast quite early in our journey.
Yeah,
you know.
And, I realized that it's pretty incredible.
It was a big, next to some very, very big names, including the one here. It's like way bigger than us. But to me, it was a no-brainer because I just saw the people that you're bringing on and just the long format of discussions. And so, yeah, we're very glad to be a supporter and will be for a long time and keep doing the hard conversations and bringing them to life for people.
Amazing. Thank you so much.
Thank you, man.
As you probably know by now, I host some of the biggest names in Bitcoin and crypto on my podcast. But a lot of the best stuff never makes it on air. The Shift newsletter is where I share that raw behind-the-scene alpha, the insights, stories, and lessons straight from my guests that you won't hear anywhere else. If you want the real inside take on Bitcoin and crypto, join my newsletter, The Shift, in the description down below.